I scored a 95 on the FAR exam, and I've helped countless students to pass the FAR exam as well. In this video, I want to give you my best tips for the FAR exam. I'm Ashcraft CPA, and I've helped over 200,000 students to learn about accounting and the CPA exams through my YouTube channel, and over 1,500 students through my online accounting courses. So in this video, we're going to talk about the structure of the exam, what makes the FAR exam difficult. I'm going to tell you about my study approach for the FAR exam and how you can use it yourself. Then we're going to talk about the most important topics you should focus on for the exam, and we'll talk about important study tips as well. So with that, let's jump in. So first, let's talk about the structure of the FAR exam. You're going to have 50 MCQ questions, and then you're going to have 7 task-based simulations. So this is the least amount of MCQs in any of the exams, 25 per testlet, because you're going to have a lot more calculation-based questions. So based on the skills that are tested for the FAR exam, only 5 to 15% is remembering and understanding, where you simply need to know a rule and recite the rule. But the rest of the exam is the application and analysis skill level, meaning you're going to have to apply the knowledge through the calculations. So what can make the FAR exam a challenging exam? Well, the FAR exam includes a large number of topics and a large variety of topics. So you're learning everything from accounting for cash and AR, to the cash flow, to not-for-profit accounting. So just reviewing all of the rules and keeping all the journal entries in your mind is really difficult to retain for the FAR exam. Now, my main tip for the FAR exam is for you to use Excel while studying for and taking the FAR exam. Now, the actual exam doesn't use Excel. It uses a spreadsheet that's called Spread.js, but it has all the same functionality of Excel. So you should be practicing with Excel for 2 reasons. One is that you're going to have fewer errors in your calculations because you're actually using the cells for the calculations. And 2 is it allows you to review your calculations before submitting the testlet. So just by using Excel instead of handwriting out your calculations, you could identify several potentially incorrect questions. So I highly recommend that you use Excel. So what approach did I take for the FAR exam? I studied over the course of 8 weeks, around 20 hours per week. Monday through Friday, I would study for 2 hours per day, and then Saturday and Sunday for 5 hours per day. So the focus of a 2-hour weekday session would be to first open up the session by reviewing the outline of what I was about to learn for 10-15 minutes. Then I would watch the video and make notes about what I was learning in the video. And then I would spend the rest of the time practicing questions on what I just learned. That way each day I was covering new content and then reviewing the content as well. So then I would get to the weekend and it would all be about reviewing the prior content. So I wouldn't learn any new content on the weekends. I would just run MCQs and task-based simulations on everything that I learned throughout the week. So this is the approach that I took. And then once it got to 2 weeks out before the exam, I took the first practice exam so I could identify 5 troubled areas to really focus in on. And then about 10 days later, I took the second practice exam. And then from there, I just reviewed my outline several times leading up to the exam and then jumped into the exam. So like I mentioned before, since the FAR exam has so many topics, reviewing an outline is essential to passing the exam. I've created a comprehensive FAR exam outline, and I would love to give it to you as a study tool. So click on the URL here to download the FAR exam outline. So now let's talk about the most important topics on the FAR exam that you need to master. This includes the cash flow statement, accounting for leases, consolidating financial statements / eliminating entries, and then earnings per share. So let's go into each of these topics and give you some essential tips. Let's start out with the cash flow statement. So the basics that you need to know about is where you put each transaction into, operating, investing, or financing activities. But the way to think about it is if you are spending cash on a long-term asset, that's going to be in the investing activities section. So if I purchase a fixed asset, that's an investing activity section purchase. So then when I sell the asset, it's also going to be an investing activity cash inflow. So once you have your first entry in a specific section, all of the following entries are going to be in that same section. In another example, your financing activity section is for when you are raising cash through either long-term debt or through equity. So if you issue stocks, for example, you raise the cash, you then have to pay the dividends. So that means you're going to have the cash outflow be in the financing section as well. Because when you initially raised the cash from the issuance of the stock, that was also a financing cash inflow. The next thing you need to know about the cash flow statements is how the operating activity section works. So mostly we're talking about the indirect method. So we start out with net income. So then our goal is to have reconciling items to where net income is including certain items that were non-cash transactions, such as depreciation expense. So net income was decreased by something that we didn't actually spend cash on. Therefore, we're going to increase it to offset that transaction. Or for example, if we're talking about accounts receivable, if accounts receivable increases, it means we have revenue for cash we haven't received yet. So it increased net income, but it hasn't been cash received yet. So we have to actually decrease it. So the way to memorize it is if your assets are increasing, your cash flow will decrease. So they have a opposite reaction. But your liabilities have a positive correlation. So if your accounts payable increases, your cash flow will increase. So make sure you memorize that to save time on the cash flow statement. So now let's talk about accounting for leases. The first thing you need to know is the difference between a finance lease and an operating lease. Now we're talking about all of this from the lessee's perspective. So that's the company that is actually paying for the right to use a fixed asset. So a finance lease is going to appear more like you're purchasing an asset, but you're just making payments on it. But a operating lease is going to appear more like just a rental agreement. So then with a finance lease, you're going to have both interest expense and amortization expense. But with the operating lease, you're only going to have one expense, which is the lease expense. And this is simply the undiscounted cash flows evenly divided. So it's going to be the same amount every single period. So what you want to know about a lease, regardless of which type it is, you're initially finding the present value of the lease. So then you record the debit to right of use asset, the credit to lease liability. And then throughout the life of the lease, you're going to reverse out that present value calculation. So you're going to be increasing your lease liability. That's because you're going to be recording this interest expense that then increases the lease liability. But you're also making payments on the lease, which decreases the lease liability. So by the end of the lease liability will go to zero. And at the same time, you're also writing down your right of use asset, so that by the end of the lease, it also goes down to zero. So the key part of leases is writing out all of the entries from start to finish of the lease to really understand them a bit better. So now let's talk about consolidated financial statements. So there's this main journal entry that you need to memorize. This is going to be a credit to the parent's investment in the subsidiary, a debit to the subsidiary's equity. That is going to always occur at year end. That's because when you have a parent that owns a subsidiary, that is like saying that I own myself. I have equity in myself, so we need to eliminate that. That's why we get rid of the parent's investment by crediting it and then debit out 100% of the subsidiary's equity. And then we have the rest of the entry, which sometimes applies. We could have an increase in the fair value of the assets. That would be a debit. We could have goodwill. That would be a debit. Or we could have a bargain purchase, which would be a credit. And then we could have a non-controlling interest, which would be a credit. That would be if we don't own 100% of it, but we still own more than 50% of the company. If you're interested in taking your CPA studies to the next step, I offer one-on-one private CPA tutoring. You can check it out at maxwellcpareview.com. So that's the key journal entry you need to understand for the consolidated financial statements. Now for eliminating entries, this is when we have transactions between the parent company and the subsidiary. This is usually either inventory that's being sold or fixed assets. And it can be really confusing to solve them unless you do what I suggest, which is write out the journal entry from the parent's perspective and from the subsidiary's perspective and see what they both recorded. And then write down what the correct amount would have been if the intercompany transaction never took place. Compare that to what they actually recorded, and that's your adjustment. That's your eliminating entry. So it takes a little bit of time to get used to, but you need to write out the entries for both parties and then find the correction from there. I think that's the best way to wrap your mind around the eliminating entry questions. So the last major topic you need to know is earnings per share. You need to know basic earnings per share and diluted earnings per share. So with earnings per share, we need to find the average number of common shares outstanding. So usually in a question, you have it to where, let's say you have 100,000 shares at the beginning of the year, and then December 1st, you issue 12,000 more shares. So it's important to treat each of those transactions separately. So the 100,000 beginning balance was applied all throughout the year. So it's 12 out of 12, so it counts for 100,000. But the 12,000 new shares were only in effect for 1 month out of the year, 1/12. So we only add 1,000 to the balance from that 12,000 stock issuance. So then our average number of common shares would be the 100,000 plus the 1,000, 101,000. So it's important that you calculate your average number of shares by each individual layer. And it'd be the same thing if you bought back treasury shares. You figure out how many months were left in the year and take that percentage to multiply to find the average number of common shares outstanding. And then the next part to focus on is with diluted EPS. So with diluted EPS, we are imagining that all of the convertible securities were actually converted into common shares. Mostly we're talking about convertible bonds, convertible preferred stock, and stock options. So if you have convertible bonds, if they convert, that means you're going to have an increase in the number of shares. So that increases the denominator. And if they converted, you wouldn't have to pay any interest. So then you would add back your interest expense net of tax to the numerator. So then if your preferred dividends, your preferred shares convert into common stock, then you wouldn't have to pay the preferred dividends anymore. So you'd add those back to the numerator, and then you would increase the denominator by the new shares. So that's what you need to keep in mind for earnings per share. So I hope you take a lot of time to thoroughly understand these key topics. And something that really helped me to understand and pass the FAR exam was to download real-world financial statements. So I would think of your favorite publicly traded company and look up their 10K report. That way you can download it and see how their financial statements are put together, so you can see how the FAR rules that you're learning about actually apply to the real world. So I hope that after having watched this video, you're one step closer to passing the FAR exam. Feel free to check out some of my other CPA exam videos, and best of luck to you on your exams.